Alright, so we're going to look at simple RSI based trading strategy, and we're going to look at how trend affects the RSI here. Now, since we've done similar work in the past, the question is, will we be able to, meaningfully change our work in the past? And we'll just start out by doing our basic research using, I would say, mostly simple moving averages. So the difference between last time and this time is that we don't really use the MACD. I have to say, I haven't really come across a situation where I think the MACD is hugely valuable. For example here, let's just ask ourselves, right? The MACD tends to tell you the same thing as the RSI, right? And as you can see, they move very similarly. So really, the question is, how much information do you gain from them? And when they are incongruent, does it tell you anything, or is it just noise, right? Maybe if you can say, well, if it's incongruent, well, then you just don't use a trade. So that's all you're using it for then. But just looking at this, right? Just look at how consistently this moves from one way to the other. Also, I've tried to trade divergences, didn't work at all. Didn't work at all. Not at all. Like, heck no. Nope. I mean, that just doesn't work. I can't say it any other way. With any magnitude I've tried it, doesn't work, right? So maybe that's because of how I'm using it, but for now, the simple answer is I've tried it, didn't work. Okay, so look at this, right? Whoa, it's going high. Oh, it's overbought, right? It's like, whoa, okay. But really, extra information, MACD is not a trend indicator, right? It's a momentum indicator because it measures the differences between SMAs and not the SMA values themselves. That difference is not the way of saying speed, or speed of an average that's already moving means acceleration, deceleration, right? That's what it's measuring, momentum. All right, that's exactly what this is doing, right? Okay, well, not exactly, but it's very similar. So generally speaking, I would also say one of the biggest mistakes I made is that you want to look for different categories of indicators to add to your list. Just because they correlate much stronger with one another. Or let's say the information you gain from using another indicator is much higher. That's the easiest way to describe it. Another way to say it is that indicators of similar type correlate very strongly with one another, so they don't give you a lot of information. All right. Okay. So let's get to the meat of it. Go to the built-ins and just pop in a simple moving average. Go to the M. Moving average. I'm just going to see if something fits or if we need additional data. Maybe we do need to use some sort of combination of indicators. We'll see, right? We'll see. Where is it? Okay. This is a 9-period MA, so we're just going to change that to, let's say, 200. Okay. See if we can make that thicker. Style. Thickness. Just make it a little bit thicker. Yeah, let's do it like that. Yeah, that's better. Okay. So for example, here you see, is this consolidating and is this just like ranging very tightly? Yes. And what do you see from the SMA? Yes, it's ranging very tightly. You know, this was in a slight little downtrend. Yeah. And then after it reached the 200 period MA, that downtrend effectively stopped. Right? Here you can say very soon after this, it was just consolidating. There was no price difference, and you can see the MAs just converging with it because of that, right? Similarly here, you can see this is it can't calculate before this, right? But this was very clearly on a downtrend, registers properly. So you just get the question of, first of all, is price trend below or above the MA line? And then the second question is acceleration, deceleration. So momentum a little bit, right? So the question becomes, beyond what RSI can tell us, can we tell if, for example, here it's it's on an uptrend according to this, but it's just consolidating so that there's no momentum, there's no increase in difference between the MA and this, right? So that is a MACD, right? What you're talking about. That's just looking at the MACD without looking at the MACD. That's just understanding the information that is in that indicator intuitively. Okay. So questions we can ask is, for example, here you see that it meets the MA line, but the MA line itself is increasing, right? So the first question is price action above or below or on top of the MA line? The second question is, what is the slope of the MA line? And the third question would be the sort of MACD question of, is the difference between price action and MA increasing, or is it, decreasing, right? So the strongest kind of uptrend is that this is the difference between volatility and momentum as well, right? So you can say that the more that a price tends to move away from the MA line, the more volatile it is, right? So that I expect it, if this happens, I don't think that's going to be sustained for very long by most stocks, right? Otherwise, obviously, eventually the MA tries to catch up. But in general, on, for example, the Forex market like this, you see if there's a very big jump, usually it's not really a sustained move, right? There's no real catalyst for that. Okay, so what do we do with this information? I would say, first of all, when the price is above, eventually it's going to come down. But that doesn't tell us anything, because if the MA is sloping up, that doesn't tell us anything about absolute price range, right? So we can't say that price range has moved up or down. All we know is that it's always going to meet the MA line at some point by nature of the stock. But the MA line is not, like, our position doesn't naturally fluctuate with the MA line, where we just always profit if we buy from underneath the MA line to above the MA line. Because if it, let's say we went long and it was on a downwards trend and eventually it reaches above, it might have been absolute... it might have been a decrease in terms of price, right? So ideally what we'd want, since we know that it tends to come back to the MA line, if we know that in terms of short-term price action and volatility, if we know that the momentum indicator of RSI tells us that it's oversold here, then we expect it to sort of go past the MA line, and maybe we can sell it when it's overbought, right? And then when it drops back down, and then the advantage that we have essentially is that we're trading both the increase in price from trend, and we're trading the increase and pullbacks from RSI, right? So if you watch my previous video where I said that in a strong trend, RSI is essentially like a little scalp for the pullbacks, and being able to liquidate when it's just overbought a little bit, right? You just use the trend as your main strategy and just use the RSI as a scalp. While if the trend is very neutral, and it's ranging quite a bit, so they have a little bit of volatility, then you can use RSI as the main strategy. And essentially trend just tells you that it's ranging, right? So trend is just an indicator that you can use the strategy. It's a very different setup, right? So there's two setups that we can use with these two indicators that work in conjunction with one another, right? One for positive or negative trends, and the other one for ranging stocks, right? Those are two separate things that lead to different strategies, right? Alright, so in the next video I will focus on how we can code that up, and also one thing to be wary of is, of course, like, how are we going to apply this to different stocks, right? How are we going to apply this to different settings? But we have a much better setup now, since it's getting at the fundamental nature of these kind of Forex pairs, right? So hopefully we can leverage that conceptual correctness to make it easier to optimize it for different Forex pairs or even just stocks in general. All right, so see you in the next one.